Hey all, welcome to ShareTrick. This is Raj here. Today I'm going to do 3 videos. The first one is just going to be indices, market updates, just my thoughts on what's happening with the market. The second video will be just genomic shares. I'll go through the watch list and attempt to do a technical analysis and try to see if there is something interesting I can throw up. The third video is going to be the 5 shares that I introduced. Those are going to be Tesla, Palantir, Fiverr, Nvidia. So those 4 shares will be there in the other video. And if possible, I'll add one more to it and make it 5 shares. So we'll progressively increase the number of shares out there to cover my entire portfolio of interest. And that will go on separately. So the idea is that when you come into the channel on a daily basis, when you look at it, you can either look at the indices and be happy with it, or you can look at the indices and genomics, or indices and the other video which has got 5 to 15 shares. So it's all a la carte, so everybody can be happy. And at the same time, I can keep track of my own portfolio. With that said, let's get started. I'd like to start with the fear and greed index. And as you can see in the chart out here, we can see that we are receding back towards neutral. And by the look of the indices and everything, it seems to me, at least at this point of time, that there is this anticipation of interest rate hikes and potentially hawkish statements from the Fed in order to cool inflation. And therefore, I'm thinking that further downside is due for all the indices, but I think NASDAQ is doing better than the rest. But this is what I feel. So tomorrow, when we look at this this particular index, I expect it to be in the neutral zone, closer to fear, because things can change very, very rapidly. And you can also see that the market momentum is dropping. That's never a good sign. As you can see in this market heat map, it's a sea of red when it comes to technology, communications, consumer cyclicals, real estate, healthcare plans, medical devices, everything is red. The green areas seem to be the banks. They have done slightly better. And specialty chemicals is another area which looks a little green. Apart from that, everything else is looking bad. Intuit has put on a 1.93%, but I think it's a very undervalued company at this point of time. And if one has the money, they could get into it. This company, I think, has got products like MailChimp and a few other popular ones. I think they have a tax app also, which is quite popular. So it's a very nice company, and I think it's at a discount right now, and that could be the reason why it's looking positive. But if you were to go and have a look at semiconductors and Nvidia, you can see at the very top, I'm just going to remove my cursor from here, Nvidia lost 1.60%. And as I mentioned yesterday, I was expecting Nvidia to come down after the initial euphoria. I'm expecting Nvidia to come down further, and I plan to buy it back again. I have kept the cash safe. It is very overvalued, as you can see in my in my last video, on which I did a feature on Nvidia finances and compared it with its industry peers. So that is that thing you have to keep in mind. So overall, it's a sea of red, and there is a whole lot of pessimism. And if I was to look at our other favorite website where I go for a lot of my charts. Here is the chart of normalized performance of Dow Jones, S&P 500, Russell, and NASDAQ. So as you can see, all of them have been generally moving in the same direction together. The drop in NASDAQ was very pronounced last time, but at this point of time, it's in tandem with the other indices, so it's not done anything worse than the others. And overall, in terms of US equity factors, the message out here is that the mid-cap growth-oriented stocks have done comparatively better than the others. And the worst performers are large cap growth companies, which are down minus 1.3%. And overall, all companies are negative. There is no category which is positive out here. And then in this corner, I would like to show you natural gas. Natural gas has gone up 5.6%. That's what we expected when we saw that the stock had fallen, when we saw economic indicators from yesterday. And then Brent crude, it's up 1.5%. Crude oil is up 1.4%. I think this was expected because the crude oil stocks were down. So that's what I have got out here. And in terms of sectors, the sectors that are doing well at this point of time are materials, financials, and utilities. They are up 0.0%, 0.1% for financials, and utilities are at zero, so they are just at break even. The worst performing is real estate, which is down minus 1.9%. And behind that is technology at minus 1.8%, and consumer discretionary at minus 1.6%, communication at minus 1.4%, and healthcare at minus 1.3%. So this is the situation that we are looking at. And very soon, consumer staples, which is down minus 0.07, industrials down minus 0.06, and energy down minus 0.1. So I'm expecting energy and consumer staples will potentially pick up as our volatility goes up and the VIX starts going upwards. Next, I would like to look at the Nasdaq futures, which is already down 1.72% at the time of recording. And we have fallen below our support, which was at 12,168.25. So I have to mark that into that as a resistance. And we are looking for our next support, which will be this diagonal red line from the previous bear channel. It was a resistance for the previous bear channel. It's now going to become our support. So that's the next support. And we have another support out here. I'm just going to increase the thickness of this line so you can see the green line out there. So that's the next support. And the support after that is going to be just below it. So I'm going to just mark it also here. 11,597.00 is the ultimate support. The immediate support is 11,665, which is this green line out here. So that's what we are expecting. And there could also be another interim support somewhere out here. There could be a minor support out here at 11,971.50. If we break through that, then the others are all going to be the subsequent support. Now I'm going to just bring out the simple moving averages. You can see that our support at 11,971.50 is likely to be pretty strong because it's also being supported by the 200-day simple moving average at that point. And the 200-day simple moving average is at 11,944.69. So it's a small range in which we may get support. And our MACD is bearish and momentum is also below average. So it's looking bearish at this point of time. Let's look at the indicators. US oil is up 1.07%. It's still being constrained by all the four simple moving averages. And our MACD is bearish and momentum is also below average. So it has got headwinds, but it's going to break through it because of the way our stockpiles have been depleted. QQQ is down minus 1.67%, and it has fallen below our last support line for the bull flag. So I'm going to make the bull flag red. So we have fallen below it and we are just being held by the 200-day simple moving average. Friends, it seems to me like we are likely to fall down further. And when we look at this line of support out here, I think you will not be able to see it in your chart. So I'm going to make this a bit thicker, and the next one out here also a bit thicker. So we have a lot of support out here. So I'm hoping that one of these things will be strong enough to hold it back. For example, the support at 286.35 is pretty strong because just below that we have the 50-day simple moving average, which is at 285.35. That should give us some support out there. MACD is bearish and momentum is also below average, not looking great at all in the chart. S&P 500 is also down 1.07%, and it is still within the bull flag out here, so I'm a bit hopeful. The support here is pretty strong for tomorrow because this 200-day simple moving average is just going to extend and merge into this diagonal line of support, which is the support channel for the bull flag. And therefore, I'm thinking that we may have some potential of staying above this line. But the overall sentiment is absolutely bearish. If you look at the MACD, it's bearish, and if you look at the momentum, it's also dropping very fast. It's below average. Russell Industrial is also not looking that great either, because both MACD and the momentum are absolutely weak, and we may potentially break through this line of support for the bull flag, and then hit the 50-day simple moving average, which is this orange line, which is sitting at 184.27. So things are looking pessimistic to me at this point of time. Dow Jones is down 1.07%, and it's fallen below 3 simple moving averages. It was a perfect doji candle, lot of indecision out there, but MACD is looking bearish, and momentum is also very weak. So I would expect further drops out here. 3 of the simple moving averages are already above it, so it's not looking great. And VIX is poised to move upwards because MACD is bullish, momentum is above average and pointing upwards, and it has got severe resistance out here, whereas for the indices, the 200-day simple moving average is forming a formidable support with the horizontal support lines on the indices. So it's a battle of what's going to give. Is VIX going to be able to break through this support, or are the indices going to be able to break through that resistance? So that's the question. Now, US dollar index has also gone up, and whenever it goes up, the money comes out of our stocks and gold and other places. So everything else becomes weaker. So that's what I would like to say out here. And then if we look at the index movers, you got Microsoft, which has fallen 2.18%, and in the process it has converted 252 into a resistance. So I'm going to mark this red. And then we had another support for us, which was at 249.86. I'm going to mark it red and make it a little thicker so you can see it. So we have fallen below that. So our next support is the 50-day simple moving average sitting at 245.88. And after that, we have another support, which is at 245.15. I'm going to thicken this line so that you can see it. And so those are our supports, and our MACD is looking absolutely weak. Momentum is also very weak. I don't think Microsoft is going to support the index. Neither is Apple looking good enough. Apple has also fallen below the 200-day simple moving average and the 10-day simple moving average, and it's just being held up by a support at 146.58. I'm going to make this line thick so that you can see in smaller devices. I'll also thicken the subsequent support line. So our next support is going to be the 100-day simple moving average, which is sitting at 142.92, which is this fluorescent blue line. If we fall below that, then we have another support out there, which is at 142.27. So my friends, I think that if we don't bounce back for some reason up here, then my target here for the cup and handle will expire. I had a target of 161.14. Unfortunately, it seems to me that we are going to miss that target. It's not going to happen. Amazon is down 2.42%, and it's looking very weak on the charts. It has got support at 92.68, but all the 4 simple moving averages are above it. Therefore, taken in conjunction with a bearish MACD and weak momentum, which is below average and pointed down, I don't think Amazon is going to support the indices tomorrow either. Google is looking extremely weak. I don't have to say anything about this. Anyone of you looking at this chart will know it's looking damn weak. And so none of these are going to help the index to do any better. So friends, I think because we have this bad economic report, which is going to lead the Fed to increase interest rates, we are going to find that there's going to be a little bit of sell-off in the market, and that could take us down. This is a long-term gain, so there'll be plenty of good shares that you could pick up. And one of the things I saw out there was Intuit. I know you guys are all more interested in genomics, but if any of you are interested or open to looking at other stocks, I would suggest that go and have a look at Intuit and see if any YouTuber or somebody has done any analysis on Intuit. I think there's a very good opportunity there in Intuit. I think the company is very undervalued at this point of time. So please check it out. It could be a golden opportunity. So that's all I have for you today, my friends. I'll be dropping 2 more videos today. One is going to be just genomic technical analysis. The other is going to be 5 stocks for whom I'm going to do technical analysis. Those are stocks in my portfolio and are stocks of my interest, which will potentially be back in my portfolio. So I'm working on those. That list is going to expand to become 15 in due course. But right now I'm going to focus on 5. I have to catch up with all of them, understand their background and where they are. So you can look at that as well. Thanks and have a great day. Bye for now.